shared, but also just the mood in general. Want to get everybody's opinions of what they think happened. Let's start with you, Alexandra. Tell us what your opinion is of what was the big thing that you heard today?
So, how to best sum it up? I felt intuitively there are two personas of Elon. He is still completely determined to win this AI game and throwing as much money into that game as necessary and feeling very positive about it, very positive about the team he has built, very positive about the products and services that will be Tesla's offerings. So on that side, nothing changed, and I felt him as determined as ever. On the car side, he was much more prudent. He took into account economics. Affordability was the key. I don't know how many times we've heard too high interest rates, and my gosh, if interest rates go even higher. I think they're playing it very safe on the capacity front from the cars, from the ramping speeds. They clearly said that Shanghai is still in the ramping phase for the Model 3 Plus. Obviously, the Cybertruck ramp is now an 18 months project to get to 250,000. So we had a lot of clues that this is prudent, making people understand, how difficult of a product Cybertruck is, but how revolutionary it's going to be. Model 2, or whatever we're going to call it, is going to be less of a stress, but still taking more time. So I saw him actually on both sides. And as I concluded earlier, I really do believe that shows that on the AI side, he feels he needs to be first there and he's determined to do it. While on the car side, he feels there is no competition that can currently produce cars that are comparable and have the same profitability, and therefore is reducing risk as much as he can. He felt at times emotional about his experience 2008, 2009, called himself probably too paranoid about this experience, which seems to be clear, which is funny with, Elon 15 minutes earlier talking about his AI investments. Funny, probably not the right word, but really in stark contrast. So given the financial results, which were complicated. I mean, I don't want to say subpar because it wasn't horrible either, but it was certainly not the results we had hoped for. It all makes sense now. It makes sense that we had research and development, CapEx going to higher extents than we thought, while at the same time not having the cost reductions filtering through all the way as we had expected. So it was what it was. Not the most thrilling earnings call. I mean, obviously, we'll all wish for something else. I don't think it's going to have a major lasting impact on the stock, but we're in for a couple of rough days, maybe even weeks. So I don't think at all that we're getting into territories like last year. Last year, always remember, was mainly due to Elon selling and then reselling the fourth tranche where, nobody expected it anymore. So this is in no way comparable. But until the Cybertruck event on November 30th, so that was obviously a positive, that is announced now and we have a date, there will be a lack of good news. There will be the naysayers will have their forum and will come out with their typical analysis and will hammer it in. So just stay prudent. Always told you this is a medium to long-term investment. Don't be in options. No point playing this. Can be a bit volatile for a couple of weeks. There we are.
Thank you for the summary, Alexandra. So it should make a point that Brian White has a YouTube channel called My Tesla Weekend. We're both co-hosting this and it's streaming on his channel as well. So Brian, I really need to find out from you. You're the expert in the factories. The comments they made about Giga Mexico, they're concerned about the economy and that they could possibly expand Giga Texas if they needed to. And the comments they made about the production line ramping up in Giga Berlin as well. So tell us what you thought about the whole call.
So we'll start with that part of it. There is They started with one line in Texas and Berlin, and they had been working to install second and third lines in both of them, but those have not ramped yet. We've seen that they've got new cost efficiencies. The cost of goods sold went down more than the price reductions. That was something we were hoping to see. It was even better than I expected, which means we could see another round of small decreases in retail costs. Not in all markets, not on all products, but some places on some things. And what that's going to do is increase demand, meaning we can get those lines ramped further. Of course, they're always looking for more pennies to shave out of the car. We knew that. But what they were saying is that it's not the time to expand in Berlin yet. And we're always expanding everywhere in Texas all the time already. What I didn't hear him say is that we are building the compact in Texas. I know there's been a lot of talk about that, but what I heard him saying instead is because the rates are higher, even though it's only a $25,000 car, this is designed primarily for emerging markets where $25,000 is still an awful lot of money, and rates are going to be high for these buyers. So what I heard him say is if the market starts to correct and the rates start coming back down, then it will make sense to go full steam, Giga Shanghai speed building this place. But in the meantime, we are going to build it. It's still going to be coming out, just maybe not at quite the pace Tom Jew might have wanted. And so but in terms of building it in Texas, the only thing I've heard is that they might build a pilot line there, not necessarily something for volume production, because the big advantage of Mexico isn't just that the labor is cheaper, because labor is such a small part of the car, or that permits are easier, because they're still a process. It's because the U.S. has 20 free trade agreements with 20 countries to export cars, while Mexico has trade agreements with 50 countries. And those are, for example, the TPP, the Trans-Pacific Partnership. We bowed out of that. Mexico did not. And they also have trade agreements with other Latin American countries. These are the places that this car is likely to be sold first, and those are critical to getting it into those markets.
Okay, wonderful. Thank you, Brian. Love to get that. Let's get to Jeff. Nobody's heard Jeff's opinion yet. I know that there's comments all over the place. They've been waiting to hear because obviously the cost of goods sold, well, depending on how you define it, it looks like it actually fell, but some people are saying it's not as good as it was Q2, depending on the reg credits and so forth. But then you said something about the rate of improvement. Please explain to all of us.
Yeah. So on the COG side, really briefly, what's happening is I'm doing more analysis real time, but what we're seeing is we're seeing a reduction in frequency. Can you guys, my audio okay? Hello?
Yes, we hear you good.
Oh, okay, good. What we're seeing is a reduction in frequency of the price cuts. What's happening is frequency is declining, and then they're, in terms of their aggregate nature, they're more select on per model. They're not across the board like what we saw in January and April. And then in terms of COGS, if you look at that chart that Tesla showed, we don't know exactly what was the input to that chart, by the way. I know some people are trying to do different spins of the data, X reg credits and so forth, and doing various spins. But if you just look at it on its face, it looks like Tesla's running above what you would have to look at it on more of kind of an annualized basis versus just one quarter. And we'll talk about Q3 in a minute. But it looks like Tesla's running above like the 1.5–2%. It seems like a decent floor for Tesla to drive COGS reductions down per quarter. Now, Q3 is going to be messy because we've said this before, of all the inventory they had, the factory shutting down. A lot of the opportunity in COGS is going to come from the new factories getting closer and closer to whatever their terminal, peak run rate is. And I think that's where you're going to see most of the opportunity. But it's not like, as they continue to increase volumes, as Model Y just continues to separate itself from other vehicles, they'll be able to continue to extract efficiencies. They'll bring on new suppliers. They'll get more efficient. The yields will continue to improve, and they'll continue to drive COGS out. The real question for Tesla is what rate of price declines do you see in the future relative to your COGS? And that's where he says, well, can you tell me what's going on with rates, and I'll answer the question. Well, there's a forecast out there from the Federal Reserve. You could take that and then you could plot out what you think you're going to do as a company. That'd be my recommendation for Tesla. But getting back to just kind of the broader, kind of the whole theme of the earnings call, I think, I think you have to separate things. I think there's an audience. I think Alexandra has studied this and she's actually tweeted and she's done some presentations about like your target audience versus kind of who's giving that information on the call. And what like the audience for that call is like, I ask you a question about, gross margins, or I ask you about a certain particular question, and I'm looking for somewhat of an objective response of what you can say in reason. And instead, kind of the conversation went down these long, winding roads, and mostly stopping at these pit stops of like absolute like peak negativity on everything. So what I found very interesting was just how like polar opposite this call is versus the October 2022 earnings call, when it was prophesized to be bigger than the top two companies in the world and so forth, and and then we saw what happened. So Tesla's basically done a complete shift of in terms of how they approach these calls, in terms of like under promising. They're massively under promising, over delivering. So let's get into a couple of specific conversations on the Cybertruck. So on the Cybertruck, the way Elon described that ramp up is what others have been saying. I've been saying for a while that this is a difficult product in segment to build. When you're doing new everything, and you're trying to enter a new segment that you've never done before, usually those types of products take about a year or more, depending on their complexity, of course, to get to their peak run rate. And we don't even know what the Cybertruck peak run rate is, and I want to get to that conversation in a minute. But my takeaway there in the Cybertruck commentary is what Elon said sounded bad if you've not been through this process before. But if you're doing a regular car or a regular EV, there's a kind of a mode, there's a schedule for that, there's a ramp curve that's associated with that. But when you're doing something as groundbreaking as this, where basically all the components essentially are new, and again, it's debatable, maybe there's some reuse on the motors and so forth, but in general, everything's pretty much new. That just ratchets up the complexity. So that time to peak volume and then that time to break even is the first thing you look at financially. And then the next thing you look at is your time to get to target gross margin. And that time to get to your target gross margin is directly referenced to the time of each of your suppliers and then each node in your factory getting to its peak velocity and its peak yield rate. And all of those things have their own individual curves to go up. So why am I bringing that up? Well, on a product of this complexity, what Elon said in terms of the ramp time frame, I'm betting it's going to be closer to a year than 18 months. But if I'm the CEO and I'm in this under promise and over deliver mode now, I'm going to say 12 to 18 months. And when you heard when the analysts asked the question, it's going to take 3 years for Cybertruck to get to scale. Elon had to come in and correct him, because that was the takeaway from the analysts. Like you said, it's going to be till 2025. That's 3 calendar years to get to production. Final thing on Cybertruck. When they talk about capacity, you're reading the earnings deck, the 125K. That's installed, that's not achieved, that's not the peak, and that's not the terminal. So let's talk through some of the definitions. And this is commonly used in the industry. So installed capacity versus what you're actually running are two different things. They're not running anywhere near 125K annualized. I could pretty much guarantee that. And that's how you heard Elon dampening expectations. But that in current installed capacity is what they've installed. Why did they only install 125? When your COGS are this high and you have these inefficiencies, you actually don't want to buy all of your CapEx out at once. You don't want to install it out at once, because you're probably going to make changes to take your cost structure down. So that's what they're doing, and that's what they're thinking through. So they're in this mode of like, they're going to stair step up velocity and ramp. They're going to stair step down the COGS on the product, and they're going to watch those curves. And they're going to look at the real order rate versus the pre-order rate, the real order rate on the product, and then they're gonna take that 250 that Elon's talking about. That is their target capacity, their current target. That's not peak or terminal. Terminal is like what you think you're going to get the product to at its peak in its lifetime, and we haven't heard that number from Tesla. So I just wanted to clarify the difference between the three numbers. I'll come
Thank
up
you
for
so
air
much,
there.
Jeff. That's fantastic. Everybody's been waiting for your analysis on that because obviously cost of goods was very critical. I want to get to Brian White and to Nick Gibbs. We'll go with Nick first because this is what I thought was most important was, oops, where are we going here? Here we go. This slide of the deck that they shared, the outlook. Look at the volume. It says here, last line, right? For 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million vehicles for years. So I want to ask Brian that, but before we get there, Nick, answer this one. So you were saying at the very beginning of the stream we were just on that the Cybertruck is critical, and it says here Cybertruck delivery remains on track for this year. So let's get to Nick Gibbs. Nicholas has his own YouTube channel at Investing Against the Grain. You should check out his YouTube channel. And sure, you've got that on just for fun. You just did that for fun for Farzad's stream. So let's explain that because otherwise you're too good looking. But tell us what you think about the Cybertruck. Yeah.
This is what I always look like. Nah, it's Halloween. Their time, October, and my birthday's on Halloween. I figured let's have some fun for this October earnings call. So before we started or I guess at the beginning of the stream with Farzad, we went around and kind of talked about what we thought was critical. I thought them announcing the Cybertruck delivery date would blunt a lot of the negativity we're going to see. And I know we're down 4.6% in aftermarkets, and we're down another 4% earlier today. I still think that this is going to be a big deal. I mean, just to frame it, if you take a step back and just look outside Tesla, GM, they're delaying their electric EV trucks. The Hummer's not selling. Ford, they're cutting people from their lines, and they're pushing back their dates further. Meanwhile, here we have Tesla announcing the delivery date November 30th for the Cybertruck. And yes, Elon's trying to, I think, a little bit sandbag, but also, state the obvious. We don't know what we don't know, right? Right now, doing a few a day, it seems like things are fine. But once you get to 100 to 1,000 a day to 5,000, you learn things and you find new bottlenecks that you have to iterate on. But with that said, if they get to in 18 months, if they get to the numbers they're talking about, correct me if I'm wrong, but that's going to be one of the best-selling, if not the best-selling truck in the world. So there's a lot of optimism there as well. I mean, clearly Elon sounded like he needed a hug, and I'm sure Alexandra would have given him one if she was there. But he seemed a little down, but it seemed like they're batting down the hatches. They're getting ready for a storm that may or may not come. But right now, the weather radar is saying, hey, there's some squalls ahead, and we need to be ready for it. And it sounds like that's what they're doing. And I think that's actually a very positive thing. So I've been in the software world for a while, and a lot of times what you see companies kind of start to, I don't want to say stagnate, but their base starts to get upset that they're not focusing on the core products and the core fundamentals. And they're always getting too far over their skis, and they're going too much into other things, and they're neglecting all the other stuff that used to make them great. Not saying Tesla's doing that, but I think this is, during these economic times, it's a good time to double, triple down on efficiency, on cost reductions, and really put an effort on quality and, making the best products out there at the most cost-effective price point. And I think that's what they're doing, while at the same time, literally putting everything on the line for FSD, for Optimus, with these H100 clusters, bringing up Dojo. And you can tell, I mean, Alexandra, hit the nail on the head with this. Elon is putting his money into that. And, if history's proof of anything, when Elon really believes or sees something, he tends to go all in on it. And right now, they're clearly all in on this AI movement. So I don't know how I went from Cybertruck to AI, but I did. I think it was a sobering call. It's a call of austerity and efficiency, but at the same time, there's still optimism for the future. He still talked about being multi-trillion, bigger than the largest companies out there. All that stuff was still said, albeit in a very, sobering tone that sounded like he needed a hug. So, yeah.
Okay, thank you. So we've got Xander Sky joining us, but I want to get to Brian for My Tesla Weekend. He's going to answer the question about the CAGR 2024 and anything else you want to do. But I want to do a panel discussion, so be ready with your answer. What did they do that was great on the call, and what did they do was they did poorly on this call? Let's go ahead, Brian.
Well, to answer the question about the 50% compound annual growth rate, how can they get there without compact, without the Semi? Well, the Semi wasn't going to produce big numbers anyhow, but the answer comes down to they're going to have about 20% more capacity to build the Highland in Shanghai. Those are going to move out, and they're going to move out at good margins because it's a slightly cheaper car to build that's slightly more expensive, at least in most markets. Then you've got the Model Y. They did a little bit of retooling in China to improve efficiencies and a massive retooling in Texas to improve efficiencies. Plus, they've got 2 more whole lines. So if interest rates can come down at all, that improves affordability and expands the market. Or if they can cut a little bit more cost, it's going to improve the demand, improve the market. And there's a lot of headroom in both of those products in all of the factories to actually increase and get us back on track. And in 2024, we will start seeing numbers of Cybertruck. How many? Well, 50,000. I mean, that's not a big chunk of the way towards getting you the additional, 700,000 you need, but you're getting close to 10% of it. So right there, it makes a big chunk. But really, the expansion is almost certainly going to be coming from the Y, and then the Model 3 Highland, the 3 Fresh coming out of Shanghai, and around Q1 coming out of Fremont as well. So both of those should increase capacity, reduce costs in a way that allows them to sell even more units.
Why don't you go ahead and answer the question? What did they do really well on this call, and what did they do poorly in this call?
Me? Oh, sure.
Yes.
What did they do really well? I would agree with Nick, the tempering of expectations. There was a lot of really great news in there that kind of got overlooked, and that's fine. But there was no hype. The only ounce of hype was, yes, we're having a Cybertruck event at the end of November. But there was a lot of great news in the report. The fact that they not only cut the cost of megapacks, but still maintained a 25% margin. The auto margins, the gross margins, were still 17.6%. That is right at the top of what the industry can squeak out. And they did it while cutting retail costs. That is huge. You can't beat that. What else was good in there? I've got some notes here. The regulatory credits that we were told years ago they're done. They're done. We're seeing the final days of them. That was 4 or 5 years ago, and they're just getting bigger because while, sure, other companies are starting to make EVs, they've resumed full production of their ICE cars. They need more credits than they have in years, and Tesla has more credits to sell than they have in years, and that makes the market a lot more aggressive, I suppose, in terms of what they're able to negotiate. So 2024 looks good, and 2025, even if we only see limited numbers from the compact by then, we will be seeing the more full ramp of the truck, and we'll have a better idea of what kind of capacity we can expect out of it. And I guess the last thing I would say on that is they've got 4 lines for 4680s in Texas, and the big numbers of units produced we've seen have come from one of them. And they are now rolling out those improvements to the other 3 lines, which means we're going to see an explosion of how many 4680s they're making in Texas, which will be going into the Cybertruck. It needs them. And they may have enough to resume production of, Model Y and maybe other products that they would want to put it in as well. So, yeah.
And what did they do poorly?
Oh, what did they do poorly? There wasn't enough charisma. It wasn't an exciting call. It was a snooze fest. But maybe that's what Wall Street needs sometimes. I don't know. Again, like Jeff was saying, know your audience. But I don't know their audience. I thought I did.
I love you, Brian. You're so good. That was an expert answer. Let's go to Xander Sky. He's a fellow bull. He's much into options and the stock market. Tell us what you think they did really well and what they did poorly.
First of all, can you guys hear me okay? Since
Yes.
last time I had audio. Okay, good.
Yeah.
So I think that they did tampering of expectations really, really well. And I want to ask that question. If you're a Tesla investor, do you care more about hype and or honesty? So for me, them having this level of fear that you know the economy is going to get worse, and their you know the amount of cars that they could sell, right? Since that is the primary way that Tesla's making revenues right now and profits. So I think that this like cautious approach is very, very smart, and people don't want to hear it, but as a money manager, they are making the right decision, in my opinion. I understand, you know, like you could look at the stock and everyone says, shut up, Elon. But I think that that part of the call is bad. I think having these long-winded answers that aren't covering the question being asked isn't good for you know the sanity of the investor, or at least the analysts. They react very you know, I imagine their outlook isn't 18 months down the line like Tesla's looking at. So I thought that is the, you know, the disconnect there. Like, I agree with the know your audience. This call isn't for you know, 5-minute responses to a very brief question.
Okay, let's get to Alexandra next. I know that you're pretty upset, or maybe that's not the wrong word, but you're a little you're focusing on the way Elon focused on the economy. Tell us what you're thinking. What was good and what was bad?
I'm actually not at all upset. Really not. The thing is, you know, I've been studying now Elon for 3 years, nearly 3 years. I'm getting used to this. And obviously most people are not, because who else is as crazy as we are? So for us, I think this was a completely digestible call. We know him. We understand his plans. We understand we can actually finish some of his sentences because things come up again and again. Now, as I've said so many times, and it is what it is, these earnings calls are not for us. They are for financial analysts, the press, and the general public, who may actually also be retail investors, but don't have the same focus on Tesla than we have. And these people need a different way of being addressed, but that's not new. That has been the issue for all earnings calls. Today was a bit more particular than others, but that's just it. So what did they do good? I loved some of the jewels in there. The first one that I absolutely want to stress is that energy. He clearly said that, because whenever Elon says something, clearly take him by the word. Energy is going to be, is already and is going to stay the highest margin bringer in Tesla's financials. Now, no, not once software as a service is up and running. Of course not. But compared to cars, energy is just the most stable and highest margin bringer. That was good to know. Second thing was obviously good was the Cybertruck news. The date, the rampant 250,000 in 18 months. That corresponds completely to what I thought. I was asked earlier today how much I think 2024 for the Cybertrucks. I said 75,000. Could actually be more than that. So that's good, no problem. And I want them to stress how painful this is going to be. I don't want the market to sit there and it's 1,000 cars in a week or whatever. This is completely crazy. This ramp is going to be difficult, and more they stress it, more people will be prepared. So what was the bad side? Well, those unanswered questions, those eternal answers that were actually not an answer to the question, this divided treatment between AI and the car sector. People don't understand that. Most people still think of Tesla as a car company. So if they just can't assimilate what the whole AI story is about and how enthusiastic his comments on that were, they will walk away with this rather negative undertone on the car business. So again, if you expected, and you shouldn't have not, but if you expected Elon and his now CFO, which, by the way, I have a question to all of you. Is the CFO now confirmed, or is that still this temporary replacement position? Has there been a decision made? Because me, frankly, I wasn't impressed. I mean, I want to give him the benefit of the doubt of this being the first call. I think he had his scripts, but he obviously, and it's difficult to do anything next to Elon, who takes over and then goes into his bushes. But just, do you all know whether he is confirmed and the definite CFO at the moment?
I think he's the CFO. That was very clear. I thought I was actually okay with him. I thought that he answered questions just fine. But let's go down the list here. So, Jeff, why don't you answer 3 questions? First of all, the first one, which is positive and negative of the call. I'm very curious what your forecast is for Cybertruck in 2024, and then your comments about the CFO.
Okay. I think the good thing on the call was if you listen to the staff, when Drew weighed in, when I think a couple of the supply chain leads may have weighed in on a couple of comments as well, maybe Lars, but the staff they're just very objective answers. Like, here's what's going on with 4680, 40% improvement in output, 40% reduction in scrap. Like, you're just getting, analysts ask questions, direct answers are given. That's what you want. I didn't hear that out of the CFO as much as I would have liked. Everything kind of turned into like a story of like, and it was, I wanted a little bit more confidence, and more direct answers. But the good for me was this, Elon's staff is strong, and it came out in that call. Again, I'll talk about the CFO in a minute, but I would say the staff minus the CFO, for that, is just like Alexander said, it's our first exposure to him for an hour, so we don't know the full story on that, but the staff is very strong. So the bad is, I want to talk about this macro discussion for a minute. This is a very dangerous thing to just continue. I think it's okay to like bring it up and make sure it's framed properly for, I don't know, 30 seconds, a minute on an earnings call. But to take 5-10 minutes or more from every earnings call and do this, what's going to happen when the rates cut, but they're cutting for the wrong reason? What if they're cutting because there's massive bank failure, bank stress, there's runs on banks, the consumer turns sour? What if we're cutting for those reasons? What if there's a housing crisis? There can be a number of different things, and then people aren't buying cars at a higher rate as a result. So I think the rates conversation is okay to frame, but I think the amount of emphasis that's on it is ill-sized relative to what Tesla's doing. And here's the story. The story they could have told on that is like, look, our COGS, the rate of our COGS reductions is now approaching the rate of any price changes we think we've made. This is what the data says. I've got a Fed dot plot to see like where we think this thing is going, and as long as it doesn't go like outrageously worse than what they're predicting, well, then this is how we see it. So the bad part of it was, I think, the macro commentary, and I think there's a number of different ways to take it. On Cybertruck, I need to sit down, Herbert, and do a kind of a more thoughtful analysis of it. But the time to peak volume, that time to the getting to the 250K being 12 to 18 months is pretty reasonable. The area under that curve to compute the initial ramp, I want a little bit more time to think about it. But I mean, I think there'll be a decent number out next year, but I want a little bit more time to think through that plan to give a better answer. And then the third one was on the CFO. On the CFO, again, it was 1 hour of exposure. I was looking for more confidence. Like, it's okay to say like, this is what I know and this is what I don't know. That's okay. And but if you're the chief financial officer of an $800 billion company, you've got to have pretty good confidence in what you know, and you shouldn't have this very like long laundry list of what you don't know. So just the way some of the things were framed up to me were could have been a little bit more direct. But again, his first call, and you've got Elon sitting next to you, so hopefully that improves. I also found him being corrected a number of times by other staff members, or other staff members having to jump in. So again, maybe nerves. I hope not. I hope he knows the information, but there's just, he's got to work through the comms a little bit more.
Okay.
And I just looked it up. And I sent you that in the private chat, Herbert. He is confirmed CFO. You're right.
Oh, I thought that was pretty clear. So let's get to Nick. You want to answer those questions, please?
Yeah, sure. Let's start with the CFO. So same things everybody's saying as far as he's new, right? So I don't really have a strong opinion on him yet. But at the same time, it's like, sometimes when something's new, it's different. You don't know if you like it or not. That's a Friends reference, if you guys caught that. What I thought he was fine in general. I kind of liked the fact that he was a little more out there and trying to engage more, which is a deviation from what we normally saw Zach. Zach was normally kind of like a timid puppy. So I give him credit for like jumping in there. The one thing that I think, he kind of got told to shut up was whenever he said the next set of EV adopters. And that's where you saw Elon get pissed off. Elon jumped in and he was like, no, just car adopters, the best car, and he went on a tirade on that one. So I think it's early days. We give the guy a break. He's different. He's a different flavor than what Zach was. So we'll see. And at the end of the day, he's the CFO. It's in a Musk-ran company. I don't think the CFOs are as critical as the CFO in another company. But I'm biased. I am from a technical side. Anyways, so the good and the bad. So I'm going to frame this from not a Wall Street perspective, but just as a tech guy who invests all in on Tesla. I thought it was good on some of the questions that they essentially said they weren't going to answer, and some that they punted. So for example, the Highland, I'm happy they didn't answer that. I think that would have been stupid for them to answer that, because you're essentially just Osborne yourself, or you're creating an expectation from other people to eventually say, oh, well, they haven't even come out with this. They're late again, right? You just create narratives for them. As far as Optimus, as far as FSD, as far as taking ownership and all that, I don't think it's wise to put out dates, estimates, or anything of that, because we've seen what happens when they do that, when Elon does that. It's just ammunition to attack them. So I'm happy they didn't, or Elon just decided to, nope, we're going to punt that. We're not going to answer those questions. I think moving forward, it's just what you got to do, because, when Elon and them were coming up and he was sleeping on the factory and Tesla wasn't profitable, right? Everybody was behind them and we loved him. Well, now they're profitable and he's this mega billionaire. Well, now he's the villain. So when you're now the villain, you got to, that's ironic with this face on, but when you're the villain now, you got to, not be so transparent, I guess. I also liked, as sad as it was, the temperament that Elon had and all that. It was a bit stoic, and I kind of did like that the call was much more structured and it didn't feel too out of left field. There weren't too many surprises other than, him kind of getting a little emotional about the everyday person being able to afford vehicles and interest rates. The bad, I think the worst thing about the call, I don't know. I'm conflicted, because I think this is bad. I also think it's not bad, because I like to see inside of Elon what he's thinking. But I do think earnings call, time and place is not the place really to vent out how you're feeling about all these things, what you're seeing in the market, how you're personally feeling, like all that stuff. I wish, there wouldn't be as much of that on these earnings calls, just because, again, I don't think it's the time and place, but at the same time conflicted, because we don't ever have another time to hear Elon talk about that stuff. And when he does get interviewed, it's the same 5-10 questions everybody always asks. So we've heard it a million times. We know the answers. So I feel like this is the only time that we get to see Elon kind of go off the cuff or just get asked new questions. So yeah, I don't know if that answers the question, but yeah, that's my answer to all three.
Perfect. Fantastic. Let's take questions from the audience. This question is from Ed says, why do you think they didn't talk about Optimus? I have that same question. I think it's a fantastic
No
question.
pun
Who
intended.
wants to address it? What do you mean? What's the pun?
Optimus,
Yeah.
like optimistic, and it should be Optimus. But they weren't optimistic on the call either. No, I mean, earnings calls should be about, really, honestly, should focus on, well, you should focus on kind of like what you did in the prior quarter and what you're doing in the next couple, and like your 5-year, like your product planning thing is to me, those are separate conversations. If it's part of CapEx, have a conversation about it. I think the mentions of Optimus in the beginning of the intro, like the progress they're making, I think that's totally fine. But to like focus the call on it, or I wouldn't do that, and I don't think Tesla did.
No, but there was a question asked, will Optimus be working on gigalines next year? And his answer was a punt. We're not ready to discuss details of the program. We'll provide periodic updates online. A few years from now, we can do ballet. So he didn't answer the question.
Yeah.
Why?
Where's the upside in answering that question?
It's exciting. He needed something that was going to be exciting to tell people, forget the production line issues that we're having with Cybertruck, but wait until we have FSD and wait till we have bots. He had that opportunity to do this and he didn't take it.
But you nailed it just now, Nick. There was no upside.
Nick?
No, not you. There was no upside. Exactly. Don't dream. No, Herbert, I love you. There was no upside in giving more details on Optimus. There was no upside in hyping Cybertruck. There was no upside in any of that. And the only moments where you felt impassionate were on subjects where the audience he had there, or analysts, finance, bank, smaller retail investors who are not following it, couldn't, integrate it. And that was just it. That's Elon. That's just, he's not going to overhype anything realistic where he could be nailed down in 2 days, whether the result is in front of the doors. He has learned that. I mean, how many times did he run into that trap and had to get himself out of it? He's not doing it. He's rather sandbagging on the reality of tomorrow, but giving us the vision for in 3 to 5 years. And Optimus details. So, I mean, obviously, you would have loved that. Yes, now they have that thing that they were looking for. I don't even remember the name of the thing that was missing for building the Optimus. You would have liked that, but actuator. That's it exactly. Thank you. But what difference does it make? It doesn't make any difference today.
Disagree. Anybody else?
As an investor, I get it. And as a tech geek, I get it, Herbert, 100%. But look how many memes there are out there. Look at all the ammunition people have out there against Elon as far as, he said this was going to happen. It hasn't happened. Although I could point out to more stuff that he predicted that did happen. We ignore all that. So instead, I like this pivoting of let's try to just not even talk about it. When it happens. And then also, I don't think, I feel like nobody thinks this is possible because it's Tesla, but there is in this country a momentum towards unionization of companies and strikes and all that. If you start to say that we're going to have bots in the factories replacing workers, or even if you don't say it like that, like it just gives more towards that. And when the stock is down and a lot of these employees rely on stock for their compensation, right? I'm in Silicon Valley. I work in a tech company. Stock is a huge part of my compensation. Huge. So it matters. And when you see it going down, it hurts. So it adds just another, potential stepping stone towards thinking of unions. And really, we don't want that. That's really a power right now Tesla has, that they treat their employees right. They pay them well. They have great insurance, absolutely amazing insurance. And we want to keep on that. We don't need to add things that might push someone to saying, you know what? Yeah, let's organize and let's unionize.
What I would say on that is the product's too far out. And like Alexandra was saying, these are analysts. They want they didn't want to talk about stationary storage until it was already cranking $100 million in profit. Well, in revenue, at least. I mean, and now we're looking at over $100 million in profit just for the quarter. And now they're finally interested as of like last quarter. And yeah, if it's something that's too far out, I think it's a distraction. I think there's a lot of exciting things that are going on with the bot, But I imagine AI Day 3 is coming up any day, and that's when we'll get all the excitement around that. So that's what I'd be looking for anyway.
Okay.
And,
so
and
I-
remember that, sorry to say that Morgan Stanley, who I think knows much more than we believe, predicted that for Q1 in 2024, and I think he's actually spot on that.
So first of all, I think you guys, I'm completely different thinking than you guys. I do not think that he learned his lesson. He purposely decided not to hype future. That's not what happened. He did talk about bots. He said that economy is quasi-infinite. He did talk about, the same thing about robotaxi being 5 times worth. That they're making progress on all this. He talked about that, what we're really building is baby AGI. I think that this thing about the bot is just more, that part I don't get. He did not say that the Gigafact it's going to be working in a factory, and I don't think it's got anything to do with he's being careful about the union situation or anything that that's never stopped him in the past. Or I just
So
that's crazy.
everything you just mentioned were all questions around when will this happen? When will we see this? When will Tesla take ownership of insurance? When will we see the first FSD robotaxis? When will Optimus be in the factories? Those are the questions that they punted on. It's a timing thing. He doesn't want to be nailed down to a time again.
Agreed. Okay. So next question here is back to the Cybertrucks. Other than fit and finish, what other hiccups do you anticipate for Cybertruck ramp?
I can take that one. If you want. Like he was saying, this is a whole new product. There's a lot of unknown unknowns, and they certainly know what they are, but we don't. We can't see it. Were there problems sourcing enough stainless? Are there problems getting those rolls of stainless to the site? Have there been problems with the castings? I know we saw last week there was a shortage of front castings outside. Maybe that indicates a problem with the press or a problem with the design itself. They know what these concerns are. They know what the bottlenecks are, and we don't. So when we're looking at getting the ramp next year up to 50,000 units, 75,000 for the year, heading into 2025, looking at 250,000 capacity, what are the bottlenecks? And it could be batteries. It could be the structure itself. It could be weight. It could be too many things to mention. And he's made very clear that cost is very much on our mind when we're building this, because it needs to be affordable and profitable. And the other truck companies, even using their outdated designs that they already own, are finding it impossible to strike that balance. Their trucks are neither affordable nor profitable, and they've got batteries the size of 3 Model Ys. That's not something you can realistically carry into the future. So can we get one with a battery pack that's only 120 kilowatt hours? If we can, the price may not be crippling. So the obstacles to the Cybertruck are there are too many new elements for us to understand what's actually going on.
Okay, Brian, we have another question for you specifically asking what are Brian's thoughts on Mexico possibly being delayed? I thought you answered it already earlier, but go ahead.
I did, but there was an additional point, which was that they made clear that they are still designing it. So I'd seen a lot of angry rumors that it was all permits and bureaucracy and red tape. But if they're still designing it, you can't get your permit until your design is complete. Certainly parts of it will be held up until that part is done. And we've seen that at other sites. We've seen it in Berlin and Texas, where they've submitted incomplete permit applications that are rejected because they're grossly, woefully incomplete in places. And maybe it's an oversight, and maybe it's something where they thought they could go back and amend it after the fact, and maybe it's something they've been able to do successfully in the past. But Mexico, I am confident, as soon as it is the design is complete and submitted, that the local permitting authority will be tasked with an expedited approval. If everything is there, get it done and out. Let them get started. In terms of the building speed, it can't go as fast as Shanghai, because Shanghai was flat and level and a melon farm. It was very easy to build there. This is sloped ground that's also very rocky, and it causes problems. Just getting it to level is going to take some time. If you're going to be doing any excavating, it's going to be a nightmare. And There was a question about drainage, but it only rains 4 inches a year there, as you can probably guess by looking at how arid the landscape is. So that's not as big of a concern. I'm sure that's something they could get around very, very quickly. So, yeah, I think Mexico is absolutely moving forward. It still makes sense, and as soon as the permits are in and done, Tesla can proceed at their leisure.
Okay, so let me pause for a second here. Look at this brilliance that we have in this panel. I'm just so lucky. I think the audience is very lucky. You got to follow Brian at My Tesla Weekend on YouTube, Alexander Mertz, just brilliance of her analysis. And of course, Jeff Lutz, and you've got Nick Gibbs. And then I want to ask you, Xander, this question specifically, which is the call was a disaster. That's all that needs to be said. Was the call a disaster, which I think we all agree was, but what's going to happen to the stock? And I think you've got your finger on the pulse more than any of us here. You're on mute. Put your finger on the mute button. Put your finger on the mute button.
I think he's having audio issues. It sounds like there's no pulse left.
No pulse.
Or that's me, I guess.
It's been a long day.
AirPods? Can you hear me on the AirPods?
Yeah. It's not good, buddy. You got to fix your problem.
That's got to be frustrating.
Figure out it's doing that the same thing it did last week. It just all of a sudden switches. But anyway, I think that historically, if you look at the trend lines, this financial astrology is getting criticized every day, but there is something to it. So if people are willing to sell their stock because they think it's going lower, and this is a catalyst for weak hands to open that don't have the conviction that we do for the long term. So you and I might look at it and go like, yep, great. I got some new money. I want to buy some more. But anyone that's like, look at, even looking at Christian, I just saw his name pop up over there. So if once you start looking at the long term, you understand that bot is gonna come. I mean, if you don't see that, you're missing the story. That's the new story. So technically, there is a trend line in both directions. Longer term, there's a resistance on the top side. We've wedged down to it, and you can see it in the background on this screen here, where if we look at a weekly challenge, you could see it back there, right? We've wedged into to this price. So this is a weekly chart. And where's it going to go now? So if the market thinks that 250 was a fair price based on earnings, and now we have some headwinds in what earnings per share looks like. You saw Gary Black already tweeted they're going to bring numbers in, but if you're okay with 250, will you pay this price? Will you pay the 230 that we're at now? Is it going to go to 220? Is it going to go to 200? Yes, I think this kind of call with this type of doom and gloom can cause even people that believe to get frustrated and sell their shares. But at the same time, I think that there's enough of people that see the new Tesla, which to us isn't new, but to them, the new story with bots and AI, that they will believe it and they'll jump in. The question of what level that happens at, that's a very difficult one to answer. But looking at the chart, I think there'll be a dip, possibly down to 200, and then I think we're off to the races back up to 300. Yeah, I know.
All right, let's ask one more question and just keep it a conversation. Anybody wants to ask any questions, go ahead. Do you think Elon should take accountability for how his behavior with X has hurt the Tesla brand? He seems to deflect to macro and attack others only. I think I can answer that quickly, that from the studies that I've been seeing, multiple very large studies have shown that Elon and his comments on X has not impacted the Tesla brand or the sales, it's actually less than 3%. And that's probably, countered on the other side of how many people have actually bought Teslas because of, who like him versus people who hate him. So at this point, we're not seeing that Tesla's hurting the brand. Am I saying something different? Anybody here want to address that?
Completely agree. And I mean, I'm sorry, you can't just have people that are perfect, right? You can't have a person that's a genius that brought us Tesla to where we are today and then suddenly say, oh, I don't like his modus operandi, or I don't like his latest hobby, or I don't like his girlfriend, or I don't like his shoes, or I don't know what. I mean, that's not how it works, right? You take a person how the person is. And I think just, anybody with half a brain will understand how much Elon is bringing to the table. And probably he's bringing so much to the table because he's different. And when he's different, well, that's just it. Then we'll have some earnings calls that we may not like, or we may have some comments on X that we don't like. And if there's some people who feel that they have to posture that they're not buying a Tesla because they don't like his behavior on X, well, then be it. That's just it.
Yeah, I agree. I mean, if you're gonna blame Elon, everybody wants a boogeyman, but if you're gonna blame Elon, go ahead, point the finger at him. But there's 3 more pointing back at you, because Elon has been the same guy nonstop, from taking it private 420 to pedo guy to all this stuff. Like, we know who he is from the earnings call where he said screw this and he went to Gali on YouTube. We know who he is. So if that's going to be your argument for why he's hurting Tesla, you shouldn't be invested in this company. It's who he is. You know this. You didn't do your due diligence. Now, if you're
Rawlinson is really how you want the person to be, right? And then go there. You'll be very happy there.
Rollins, Farley, Mary Barra, where's that same energy over there? The way I see it, I would rather have Elon be Elon, and at least the CEO of this company speaks to us, talks to us, engages with us. You don't see that from any other company, and to me, that is valuable. So again, if you're going to blame him, I get it. You want your boogeyman. You don't want to look in the mirror. That's fine. But don't invest in the company then, because he is the CEO. He's not going to change.
And what I would because say, you're the boogeyman.
Yeah. You are literally the boogeyman.
Oh,
look at your face.
Yeah,
so what I would say, Alexandra's absolutely right. He's a package deal. You don't get to cut out the parts you don't like just because you don't like them. And the big thing I saw was earlier this year when there was that big price cut, the one that was like $5,000. I can't tell you how many corners of the internet I saw people saying, you know what? I really don't like that guy, but God, it's so much cheaper than the Mach-E now. I don't really have a choice. When you make the best product, if you want to get rid of him, great. You're going to get a boring CEO to take his place who will, have some ho-hum execution. And what we've got right now is, he's the Tasmanian devil. Yeah, he knocks over some furniture, but he's very exciting. And that's what is missing in so much of the industries that he's decided to enter.
Okay. I've got 2 fun questions. You guys can choose which one you want to answer. So one of them is his comment about Cybertruck. Uniquely complexity to Cybertruck. We dug our own grave with this. It's one of his special products, comes once in a while. And then the other one was, I love this comment that he actually let out the bag, that the new low cost, high volume, next gen vehicle is going to be utilitarian, not meant to fill you with awe and magic. It's going to look cool, but it's just there for getting you A to B. I'm so happy he said that, because that's part of what I've been saying or been talking about. Thoughts on that? Jeff, why don't you jump in? I'd love to hear your thoughts on that.
Yeah, on the Cybertruck, I imagine, there was probably, as I've been, at the table with some like really interesting products that were kind of new over the years, like the Razor, for example. Nobody built a phone that looked like that. And we were sitting down and looking at that. We're like, how are we going to do these things? And I can imagine the conversation, because there were processes that needed to be invented to build that product or to build Cybertruck that weren't invented. And there's tolerances that they probably need to achieve that they don't know how to do yet, at scale and at the right cost structure. And that's what he alluded to. So when he says, dug our own grave, is like, they went for that form. Elon said, if you read the book, like, he did not want to do the, one of 200 of the same looking pickup trucks. He wanted to do something unique. And I think it's going to turn out. I actually think it's going to turn out okay. It's not going to be like the Model X, which was just a lot of complexity that just carried through the life of that program. I think they're going to figure things out on the Cybertruck. It's just going to take them time to get the scale on it. And on the utilitarian piece of the of that $25,000 vehicle, yeah, I think people are going to be a little bit surprised. I think people are surprised when they sit in an SRX today and like, wow, this doesn't look like the other $100,000 cars. And what I think people need to understand is Tesla's they took those dollars for the shiny vacuum metallized knobs and the buttons that are in those other cars and the contrast stitching, and they put it into the FSD computer, and they put it into the camera. They put into a number of different things that are going to make that a Tesla much more valuable than the stitching in those cars over time. But people have their own preferences, and they may want one thing over another. But that's where Tesla's really focused on where can they invest the money for the greater good of that consumer, and also can they bring the cost. You heard how emotional Elon got around costs, and why did I spend all this time in the factory? So when he sees probably trade-off discussions and should this be more utilitarian or not, and he sees he's got to get the COGS on this probably below $18,000. I'm sure that's what they're going through right now. Is that's the bloodletting, which is like what are the trade-offs we're going to take on this product. So I think he's given a bit of hint of the future on that, and I think it's totally fine. I did really quick want to go back to the comments about the stock price and what's happening, because the implied volatility was 4.7% post earnings. And basically, like, if it was good earnings and it was a good earnings call, you could probably have seen the options market taking it up 4 or 5%. And what happens is the earnings were so, even though they were positive, kind of going up into the call, the stock price, but then the sentiment flipped negative on the call, and magically, wow, it's down 4.2 or 3%, after hours. So a lot of that is kind of aftermarket options moving it. It's going to be interesting to see what happens. I'm just talking about implied volatility. I'm not going to tell you what the stock price is going to be on Thursday, Friday, or Monday of next week. But I found that regression of like, hey, if the sentiment flipped negative, it's probably going to go negative on the implied volatility and bring the stock down to that. So anyway.
Also, I want to point out that after the report was released, you went down to 235, then you went back up to 250. So it went green. And then once the call commenced, you had the sentiment shift. So it doesn't mean that, that Wall Street is going to sell off the stock and everyone should panic. I think, let's go back to the thesis of weak, people that don't have conviction, they might sell the stock, but there will be people that are looking for, the opportunity to buy the dip and go long. So go for it. Oh, like you, Nick, I got you.
The only thing I'll be careful of that, I agree with you, Xander, by the way, is the opportunity to buy the dip. 2021, 2022, liquidity in the overall market was a much different thing than what it is today. So, not saying there's not liquidity out there, and it's not saying that people aren't going to buy Tesla. It's the most heavily traded on the options market. But that music is going to stop at some point. We're going to need to get into an earnings call where there's actually like good numbers and there's good sentiment and there's like good conversation. Here are the risks. Here are the opportunities. Here's what we're doing about it. Like, we're going to have to get to one of those earnings calls. I know I sound a bit frustrated, but that's going to have to happen at some point, because this, if you have the same song going about, you're worried about what's going on in macro and how many cars are going to be purchased. Well, that same sentiment's going to be about purchasing stock as well. It's liquidity.
Yeah, that's a great point. I just think that, if they were saying this doom and gloom, but haven't positioned the company to be able to absorb the shocks that may come, I think that like I said in the beginning of this call, I think that that's the person I want managing my retirement. I've trusted them with my retirement
account. So that means I want them to be extra cautious. Don't start building out all of these factories if you can't, if the demand isn't there. So I think that it's just a prudent thing to do, and I respect it. But I agree. The long-winded replies can hurt the company. Can hurt the stock short term.
Okay, and I want to ask Alexandra a question about the margins. And so, when they're talking about future margins, remind everybody when he was talking about robotaxi, and he again went back and repeated everything he said, but he did end up with saying we are a hardware company with software margins. At the investor call, you had the pleasure of standing up there and asking Elon the question, what is peak margin? Meaning, what margin could Tesla get if you now are able to do FSD margins and sell that? He said 80% to you. So I wanted you to ask that. And also, what did you think about the answer when they asked them, why did you guys reduce FSD at this point? Yeah.
So perfect. Thank you. Best curveball question of the day. So Pierre Ferragut asked more or less the same question I asked at the May shareholder meeting. And you probably, if you've seen that, I had to insist a couple of times because I wanted to get something out of Elon. And actually both his answers that I finally got, which I want to call out, Jeff helped me prepare that question. Both answers I then got, he reiterated to the point today. And it's always the same reasoning. And I still think analysts are not there yet to follow his reasoning. His reasoning is the car is currently used 10 to 12 hours a week. With FSD, the car is going to be used 50 hours a week. So you're getting out of it 4 to 5 times more. Okay, that's the base scenario. So my question was to him, okay, so what does that make to margins? When and how is Tesla profiting from this higher usage of the car? And we're dancing around that for a couple of times, but what came out of it very clearly is the following. Cars, best case scenario, will always have a gross margin of about 20%. Okay, we're currently a little bit below that. I think we're going to move back there at one point again, but it really doesn't matter because that's the smaller element. The second point was energy will be at 25%. And he reiterated that today, saying energy will be the highest margin product. There we are. So that is product. That is not service. Okay, so make a clear distinction. When he was talking about highest margin product, it is something tangible compared to service. And so his reasoning of how much more can a car produce in income for Tesla, his answer was, well, we're getting into the 80% margin category. Now, there's a lot of question about how you apply these 80%. Is this 80% on all outstanding cars, then brought back as a software revenue margin? So is it in percentage of car sales? Obviously, it's not. So it's the base number for this 80% is a big question. And I've thought a lot about it, and I'm still not 100% certain I can, nail it down to the number I want to have it. But the clear answer is, and it was the same answer today, that the software as a service is where it will all play out. That is it. And energy will be a stable, high margin product. So taking it from there, I was actually surprised that Pierre Ferragut asked that question today because he didn't get anywhere further. That seemed to have been, dealt with. And I wasn't the only one who had asked this question. There are some earnings calls. I listened to old earnings calls in 2018 where these questions already came up. He wasn't as clear in his answer then, but it's always been the same line of thinking. Now, where I did have an issue is a big word. Today was the question, why did you reduce to $12,000 the FSD? And is that a trend? What can be taken? And his answer was, well, we wanted to make it in the short term affordable. So what can you read out of that? My initial thought was, okay, they wanted to sell more FSD. We didn't have any indication, by the way, if that was the case, if they sold more FSD. We don't know. There was just no number in there. We may have something in the 10K, but we'll have to wait. The second thing was that, but that's temporary. Once the value of FSD can be really applied, that perk is going to go away. And there, Pierre Ferragut, same question came back, same analyst came back and said, shouldn't you have a two-tiered system where people who want the base FSD get it at a quite affordable price, and then people who want to use it commercially and want to do a lot? And he didn't go there at all. So I think the business case for FSD will be explained once we have version 12 and when prices can really be applied in a different way, where the monthly price. My long-term theory is that there will be no purchasing anymore of FSD. People that have purchased it, it will stick with the car. We didn't hear whether the transferability that currently happened is going to become a perk again, but my theory is there will be no purchase of FSD ever anymore at one point, and it will only be then for new clients accessible through a monthly subscription. And that will have different cases, people who want to rent it for a day or for an hour, or others who want to have it all the time will have different prices for it. So anyway, so he didn't get into that, and I don't think it was the moment for that, like it wasn't the moment talking about Optimus in any detail. But I was surprised that Pierre, who is an analyst I respect a lot and who did lots of good research on Tesla, asked these quite basic questions. I mean, if you are in the Tesla universe, these were not the most surprising questions if you followed this year. So there we are.
Perfect answer. Okay. Anybody have anything that is very insightful to add to any topic that you heard in earnings call? Just insightful ones.
I want to say my takeaway was that the overall sentiment is what happens with the business once rates drop.
Love it. Nick?
Yeah, the only thing I would add in is zoom out. I know we're all zoomed in right now because it's the TSLA earnings call, but look what Ford's going through. Look what Volkswagen's going through. Look what GM's going through. If Elon's right, if Jeremy Siegel's right, if all these people are right, that the Fed's gone too far, we're going to have all these issues, potential World War III, all this stuff, we're sitting in a very good position with Tesla compared to everybody else. And I think, just it's sobering to even think that we might have a potential for another 2008 situation, but it can happen. It happens. We'll get through it. But Tesla is ready to go through that storm. Like Elon said, the ship won't sink. Others will.
Brian?
I have one thing.
Gotcha.
The red credits is interesting. It looks like other auto is capitulating, and it looks like the thing that was going to go away is actually going to grow. I know, like we want to talk about gross margins x red credit, but the reality is other people can't make an EV profitably, therefore they're going to have to pay Tesla.
Fucking $500 million. I mean, excuse me.
So,
what did you just?
So that's going to continue.
I would never do that. I never say a big word like that. No.
I love
just
that
ruined my
energy.
monetization. Thank you, Alexandra.
I'm so sorry. I sent you a coffee.
And that's the big thing is people are forgetting. Again, we kept hearing it's over. It's not. It's just getting started because the other guys, every time they bring out their new EV, they're so excited, and then they just kind of forget about it or delay it or refuse to make it in series volume, because every car that Tesla makes is a competition for the legacy auto. When they say, oh, they're losing EV market share, they're not. They're gaining automotive market share. While the other guys, when they build an electric F-150, it's not really competing with Rivian, it's competing with the gas F-150 that they were going to make 20 grand on, and now they can't.
They're losing money. Exactly.
And it's not just that they're losing money on the EVs, they're taking money out of one pocket and not even putting it in the other pocket. They're just throwing it away. And it's kind of a death spiral.
To sit on the dealers' lots where the dealers get annoyed, where they don't want to sell it. I mean, it's the endless story. But I just want to make that last point because I have to then also get off this here. remind me of that in a couple of weeks, Herbert, because we'll hear the next couple of weeks will be tough. All these bears will come out and scream how they were right and how this is all horrible, whatever. The one thing, keep an eye on it. He's not fearing the car competition, neither ICE nor EV. That's why he can try to really scale to the exact needs, to the exact price, still have free cash flow, and use all the rest of the money to throw it to AI, because that's where the future is. That is the story, and that's the story we have to make people understand, because they don't understand that.
Spot on.
You guys are so awesome.
Yep. I think the last point I just want to make is that he did clarify that price elasticity is working. When you reduce prices, they increase sales, but he clarified why that is, and that they need to bring the prices down to be as expensive as a RAV4. It's a RAV4, Alexander, not a RAV4. RAV4.
Rav. Oh, Rav.
Rav.
Oh, sorry.
Just FYI.
Okay. I learned.
I am very fortunate. Hopefully the audience felt the same thing. We got experts galore, and I'm able to take the question and apply it directly to the person who has the best answer. Thank you, everybody. Appreciate it.